Hi guys, welcome to my channel. In today's video, we're going to be talking about the 6 common misconceptions people have about investing. Obviously, this video is going to be centered around the stock market investing. So if you're obviously new to investing or you're just curious about it, this video is going to be so beneficial because it's going to prevent you from making stupid mistakes or just going into the stock market blindly. And then when you lose money, you start looking for one of your village people to blame.
You are a failure. You are a failure. You can never make it.
So without much talking, let's get straight into the video. Number one myth people have about investing is investing in stock markets and gambling are the same thing. Obviously, this is not true. This is 100% cap. Investing in stock markets is legit. Millionaires and multi-millionaires around the world will all invest in stock markets. Investing in stock markets is basically buying shares of companies. These companies make products and services that we all use. I mean, if you look around your house, you can see probably 1 or 2 products that you use on a day-to-day basis. You can't live without that product at all. These companies make these products and services and they sell it to the consumers for money. You investing in these products and services basically means you are giving the company added funds for them to invest in, let's say, their research and development, product diversification, and their marketing. These companies obviously in return will obviously reward you for buying their shares by paying you dividends. Dividends is basically the share of the profits that the company make. And you can also make money from buying shares of the company by the appreciation of the stock. So let's say a stock is worth $5 per share. If you buy that stock at $5 per share and it appreciates to $10 per share, you have made money from that stock. So those are two very good ways you can make money from investing in stock markets. But on the other hand, I mean, gambling, I always like to refer to all those gamblers as sportpreneurs.
All my guys are ballers.
I mean, maybe they have some kind of psychic powers, or maybe they are the Flash that can run into the future and run back and predict 100%. I mean, if you can, please help your boy. I need this, please.
Please.
So basically, gambling is not sustainable in any way because if you look at it, you are basically trying to predict the outcome of an event. Every single time you're trying to predict it, it's not going to be possible because you can't just get it 100%. So you're going to end up losing money in the long term. So let's say you play 5 times, you end up losing like 4 times or 3 times. And then you keep putting more money and keep putting more money and keep putting more money because you have that hope or that desire that one day, if I can hit that very big one, I can make money. And most of them enter that loop. And it basically leads to addiction, which is not good for your mental health in any single way. I mean, if you look at Warren Buffett, he's basically the GOAT of investing. This man has a net worth of $134 billion. This is not Naira, this is $1 billion. He started investing when he was 15 years old. 15. What was I doing when I was 15?
What would you want to be in future? I would like to be a terrorist.
This man was investing in stocks at the age of 15, and by the time he was at 28, if I can believe, he was already a millionaire from his investment in stocks. The second common misconception people have about investing is only for the rich. I mean, me, I kind of fell into this circumstance because, I mean, growing up and watching movies and series, they only depicted investors as very mature men who had so much money and so much information at their disposal to start. And I mean, watching that, you can kind of feel discouraged, like, how can I get to this level? It's not realistic. But in actual reality, I mean, there are actually people that have all this money though, but
No!
if you look at it, they didn't just start from having so much money. They started from the little they had and they built their wealth to a certain level over a certain amount of years. So you too can also start with your investing journey. You have YouTube, you have Google, you have so much information there. I started investing by watching a lot of investment videos on YouTube. And now with the investment of fractional investing, you don't need to have so much money to start investing. Let's say a stock I want to buy, let's say Apple stock now is like $200 per share. And I don't have $200. I can invest whatever I have. Let's say I have $10. I can invest $10 into that Apple share. I can buy a piece of that one share, which is $200. So when I have money, let's say in the future, I can reinvest into Apple share, keep adding, keep building up my share so I can own one share of Apple. I mean, if you look at that, that's so beautiful.
Another one.
Because now, with that invention, everybody can start investing. You that are giving excuses that you can't start now because you're only earning 50K, 60K, 100K, 150K. You can start investing. I started investing when I was a student, 300 level student in school. I didn't have so much money, but the allowance my father sent to me, I'll take a piece of it and I'll invest into the stock market. And if you look at it now, in hindsight now, 2024, I mean, it really paid off though because the compound interest from my investments really took care of a lot of my emergency life issues here. So you don't need to have so much money, honestly. You can start with as little and as much as you can with the help of fractional investing. And you can basically open an investment account as fast as you can open a social media account. Literally, just download an investment app. There are so many that you can use in Nigeria here. We have Bamboo, we have Truth, we have Chaka, we have AfroInvest. You can download them, sign up, and you can start buying your favorite companies. The third misconception about investing is if the market crash, you have lost money. If the market crashes, you don't lose your money at all because investing in stock market basically involves buying ownership of a company. There are going to be long and short-term volatilities in the market. Volatility is basically the up and down movements of a particular share or a particular market. These volatilities are very constant. So if you are paying attention to the short-term volatility in the market and you end up getting scared and you end up selling, then you're basically cemented your losses. But if you do your research very well on good companies and invest in those companies, and you have the mindset of long-term, reaping the benefits long-term, you don't have anything to fear about the market going up and down. There are so many factors that can affect the market going up and going down. It can be internal issues, it can be external issues. Some internal issues could be like, let's say, product launch, it could be dividends policy, it could be news about, let's say, the CEO or about the company. It could be so many things. And some external issues could be, let's say, the interest rate, inflation. It could be natural disaster. It could be global pandemic. Like the COVID pandemic, it really affected a lot of businesses. So factors like that are usually temporal though, and they can affect the stock market in the short term. So if you're investing for the long term, definitely it will obviously rebound and recover back. And in the long term, you'll make your money. I mean, if you look at it from hindsight, the major crashes that happened in history, that people thought that, oh my God, this is the end of it. There's no recovery from this. If you look at some of them like the 1929, 1973, .com, 2008, COVID-19 pandemic, these crashes was like huge. Like people were literally running around like nobody knew what was going to happen. But if you look at it from hindsight, the market always recovered from all these crashes. So you should not always be monitoring your stock on a day-to-day basis. Like you should just focus on investing every month consistently and like investing for the long term, because where you make your money in the stock market is by building compound interest over a certain amount of years and then making your money from it. The fourth misconception people have is investing in the stock market is complicated. I mean, there can be some complicated aspect to it, like let's say reading and understanding a company's financial statements, balance sheet, and the likes. There are so many resources you have. You have the Google, you have YouTube, you have any chatbot, ChatGPT, Gemini, and the likes to put you through this. You don't need to pay for classes, or you don't need to go for any, let's say, seminar where they'll charge you a lot of money to learn this. You can learn this for free at home. I started learning how to invest by watching YouTube videos online. And at some point, when I started talking to my friends, they were really impressed with what I was saying.
I never expected it.
In my mind, I'm like, I just watched a couple of videos online. And as I was watching these videos, I was implementing what I was learning to invest in. And with over time, like constant reinforcement, you keep learning every day. At some point, you become an expert in that particular field. So you can easily start now for free. Go online, check a lot of free resources, learn, read about the stock market, and do your research before investing, please. The fifth misconception people have about investing is there's a fixed rate of return for investing. I mean, I speak to my friends, my family, my colleagues about investing all the time. And the one question they always ask me is, Elvis, if I put a certain amount of money into this investment, how much can I make in a month or 2 months.
Oh, what are you talking about, man?
Investing is not a get-rich-quick scheme.
It sounds like a get-rich-quick scheme.
Yes, thank you. You will get rich quick. We all will.
You can't expect to put money and then make a certain amount of money in a particular month. If you are interested in making a fixed rate of return, there are so many other platforms that you can use. You can use Bamboo, you can use PiggyVest, you can use Branch, I believe. And they offer anywhere from 10% to 50% interest on your money. But investing in the stock market is basically buying the ownership of the company. So if the company does well, the stock market will appreciate and you make money. If the company doesn't do well, stock market will go down and you can lose money on it. So your mentality should basically be investing for the long term, because that's really where you can make money from your money compounding, and you can also make money from dividend payments. But investing to gain money in the short term is not the way to go. You're better off investing in a high interest savings account, or better still taking that money and starting a business with it. And the sixth and final misconception is you can time the markets. There's nobody, let me just tell you, there's nobody that can time the markets.
To this day!
If anybody tells you they can time the market, that person is a fraud, and you should not trust that person. You should not give the person your money at all. Nobody can time the markets because there are so many factors that can affect a company's performance, and there's no how you can account for every single factor that can affect a company's performance. So the only guaranteed strategy you can use is basically investing consistently every month. Whether the market goes up, whether the market goes down, just keep investing consistently every month. Let compound interest and time run its course, and I can guarantee you in the long term, you will make money. I mean, when I started investing, I thought I could also time the markets too. And my friend told me about Bitcoin in 2017. Around that time, Bitcoin price was still very low. But in my mind, I was like, okay, this particular asset is too overpriced. And I was like, okay, let me wait for some time. Let the price go down a bit, and then I'll invest in Bitcoin. I mean, in hindsight now, looking at the price of Bitcoin, I missed out big time and I regret it. That's basically one of the biggest regrets of my life.
They ask you how you are, you just have to say that you're fine when you're not really fine, but you just can't get into it because
2 hours later.
Also, too, if you look at Nvidia is basically one of the world's most valued companies. This company is currently, I think the share price is currently about $1,150 per share. I started investing in Nvidia around 2021 when the share price was around $200. I was buying shares, but I felt in my mind that Nvidia shares were kind of overpriced. So I said, let me just wait a bit. Maybe the hype might die down. Maybe the share price might come down to reasonable levels and I can invest. And the stock market, Nvidia shares never went to that level that I wanted to. It just kept on going up from 200 to 400, from 400 to 500, from 500 to 700, and now it's at $1,000.
You can't keep getting away with it!
If I had just basically invested the money I had at that point, rather than trying to time or predict the market for it to go down, for me to invest, I would have been in a lot better position than I currently am right now. So please don't try to time the market in any way. Only a fool will try to time the market. Just focus on investing your hard-earned money consistently on a monthly basis. I hope this video has been able to convince you and not confuse you about some of the misconceptions people have about investing.
You get it? If you don't get it, forget about it.
Please, if you like this video and you found it useful, please don't forget to subscribe, hit the like button. It really helps my channel. Thank you very much for watching this video, and I will see you in the next one.